Now that we know, all right, the market or the monthly time frame is about to continue the trend it was embarking on, we go on to the weekly time frame. Now, what do we use the weekly time frame for? I use the weekly time frame to mark my areas of interest, where I'm going to buy or sell from. Now, if you notice on the weekly time frame, we were never bearish. Oh yeah, market structure, simple higher highs and higher lows. On the monthly time frame, we were never bearish. Higher high, higher low, higher high, higher low, higher high, higher low, higher high. This is market structure. This is what a bullish market looks like. And then break of structure, retest of the left shoulder. These are things you would not see on these are things you will not see on fake gurus, mentorship. Anyway, let's move forward. Let's leave those boys alone. Then a lower low, right? And then the lower high into this head and shoulder that it has created. You see how easy this looks, isn't it? And then the lower low and then a lower high. You see how we've transferred from we've conformed from this into this. And looks very easy to identify, isn't it? So the exact same thing right here. Higher high, higher low, right? And then we had a push to the upside and then created lower lows and lower highs. But these lower lows and lower highs are not shaped for structural lower lows and lower highs. These lower lows and lower highs you see around here, these are pullback, lower lows and lower highs. Until we break this structure right here, we body close. Then that is when we say, oh, we're bearish. So the monthly time frame was never bearish, even though we had a pullback. The weekly time frame was also never bearish, even though we had a pullback. So we then go into the daily time frame to then trade the direction of the overall trend.